the Saudis want between 80 and 100. So
is that possible? Is that where we're headed, do you think, at this point?
To put it in sort of horse racing parlance, they're going to the whip here to try to get prices higher and higher. Okay, what they're capitalizing on is their own production restraint, getting a good measure of help from other
You're talking about with a horse, right?
Yeah.
I mean, you're not some weird perverted 50 Shades of Grey. Okay.
No, I mean, that's an interesting series of movies.
Keep it
that's an interesting series of movies.
Yeah,
I'm talking about the horse.
The rest of us were right with you, John.
The Kentucky Derby's coming up, Joe. On NBC, I think.
All right.
But the big
threw you off, didn't I?
A little bit, but the catalyst has been, and one thing I think I might have underestimated is the implosion at Venezuela's state-run oil company. It has become an absolute mess.
It's a mess.
They're a mass. People are quitting in mass now that the military's taken over. The production there could go to near zero. The majority of their refineries are shutting down. What I had thought was likely to happen was that because they're so indebted to China and Russia in the oil space, direct lens from the major Russian oil companies and the Chinese oil companies, that they would basically do sort of a foreclosure deal and come in and take them over and run it themselves for a while so they got paid off. It's not happening. And so the Saudis are really capitalizing on that lost production.
How much production are we talking about? From
upwards of 800 to 1 million barrels a day. And going down. And it's key oil because even our Gulf Coast refiners rely on that heavy sour oil at this point.
We've always talked about, at least the last few years, about how U.S. production could just kind of open the spigots again and ramp.
And we are. We're at a record. We're at 10.6 million barrels a day almost. We are the second largest producer. We could eclipse Russia this year and become the world's #1 oil producer. The other issue is that there's a lot of demand out there, including here. Last week, this was an incredible statistic yesterday in the weekly inventory report. Highest gasoline demand ever for a week. Forget not summer, not this time of year.
Driving season.
Period.
Yeah.
Numbers that just jumped off the paper at you. We're doing a lot with that too. It's not just internal consumption. High levels of U.S. gasoline exports, so we're supplying the world, Mexico in particular. So some of the traditional sources of supply or excess supply that would normally keep a lid on prices are having issues. Mexican refiners are having issues. The Venezuelan situation we just talked about. And now the Saudis, I think, are really, again, going for the jugular here and trying to goose the price higher.
But how long term is this situation going to stick around? I mean, how quickly could this get back to a situation where, okay, more people bring more wells online? Well,
now it's going to be really, now we're getting to a price point where it's going to be really hard for the Saudis to keep to herd the cats and keep everybody in the deal here. You're going to see more and more production coming on. You're going to see the Russian oil companies especially starting to squawk and want out of the deal. So they're going to have a challenge. And interestingly enough, the Saudis were warned by the International Energy Agency that they're sowing the seeds of their own demise again, because this is going to bring on deepwater U.S., deepwater Brazil, even more U.S. shale production, because they're just going to sell forward the futures curve and lock it in, and they won't care where the price goes because they're going to have their hedges in place that's going to allow them to pump it 50, 40, 30 and be getting paid effectively $60, $50, $60, $70 a barrel.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.